Hello, I'm Peter Towers. Welcome to this special component of the briefing on crowdsource funding equity raising, whereby we're going to look at a cousin to crowdsource funding equity raising that is known as Early Stage Innovation Company. We mentioned this in briefing number 2. We talked about Early Stage Innovation Company. When the government announced its policy on innovation in December 2015, the then Prime Minister indicated that the government was going to proceed with legislation for 2 new types of corporate entities to be established. These were an early stage innovation company, which is what we're going to talk about here now briefly, and the crowdsource funding equity raising. And obviously this whole series is about crowdsource funding equity raising. But because we mentioned early stage innovation companies, and because it is a cousin to crowdsource funding equity raising, we decided that we would give you an overview of what an early stage innovation company is. And if you are interested, we have a completely separate product package relating to early stage innovation companies. An early stage innovation company was created by the federal government to try to encourage investors to invest in young startup companies, someone who had developed a new product, process or service. And what the government did is they offered an incentive by a tax rebate based on the original investment into the company. And the original investors can also be entitled to a capital gains tax exemption in certain circumstances. So if the company has developed a new product, process, marketing or organisation methodology, and the company is under 3 years of age, and the expenditure of the company and its 100% subsidiaries in the previous 12 months was less than $1 million, and the assessable income of the company and its 100% subsidiaries was less than $200,000 in the previous 12 months, and the company was not listed on a stock exchange anywhere in the world, then the company has passed the first series of tests relative to being an early stage innovation company. But then the company must pass one of 2 remaining series of tests. The first test is a gateway test, whereby the company has to earn points on various aspects. Things like, has it been undertaking research and development, and what percentage of the company's expenditure does that relate to? Has the company participated in the Accelerating Commercialisation Program? Has the company already raised $50,000 in share capital from arm's length investors? And there are others. Each of those components is awarded a predetermined number of points, and if the points aggregate to more than 100, then that company has qualified as an early stage innovation company. There's a bit more to it than that, but that will give you an overview of how this works. But if the company cannot pass the gateway test, it then can move into the principles-based test to determine whether the company might be an early stage innovation company. And in the principles-based test, there are 5 questions that really analyse how this company is likely to perform. And they must be answered, and they're not yes/no answers. At least a page of material needs to be submitted to identify what the company's plan is, how it's going to market this product. Is the potential market bigger than just their local market? How are they going to scale up? And other questions similar to that. So the benefit for investors. So the companies go through the qualification process and they know that they are potentially eligible. The benefit for an investor is that a retail investor, who is someone who is not a sophisticated investor in accordance with the Corporations Act, the maximum investment that a retail investor can make into an early stage innovation company is $50,000. Remember that maximum investment in a crowdsource funding equity raising company is $10,000, but for an early stage innovation company, it is $50,000 in a 12-month period. Now there's a tax rebate, and the tax rebate is calculated at 20% of the investor's investment up to the maximum amount of $50,000 if they're a retail investor, meaning that their tax rebate could be a maximum of $10,000. And for a sophisticated investor, it's also calculated at 20%, but the maximum rebate cuts out at $200,000. The company can put in more than $1 million, which would equate with $200,000 rebate, but the rebate that they receive is limited to $200,000. But there's more. The investor, as long as they hold those shares for longer than 12 months and less than 10 years, will not incur any capital gains tax on those shares when they sell those shares into the marketplace. So there's some significant benefits. Companies need to go through a due diligence process to qualify as an early stage innovation company. And in the material which we have produced for our accounting subscribers, and we have some packages available for businesses to familiarise yourself with this process also if you wish to subscribe for them on ESS Small Business. This is a very valuable piece of legislation, amendments which were made to the Income Tax Act to facilitate this whole investment encouragement process that the government has put in place. So if you require any further information on how early stage innovation companies work, please contact us. Incidentally, when you're looking at capital raising, I think you should go to early stage innovation companies first and then rule the company out. Obviously, the 3-year rule is a big hurdle for a lot of companies, and then the expenditure and the income are the other two main components. And then if your company is going to qualify under those rules, perhaps you should pursue that line of thinking first, because there is a real attraction for investors to invest into an early stage innovation company. If you would like more information on early stage innovation companies, or more on crowdsourced funding equity raising, of course, please send me an email, peter@essbiztools.com.au. Now I suggest you return to the series that we have produced on crowdsourced funding equity raising to make it more understandable to everyone involved in supporting and working in small and medium-sized enterprises in Australia. Have a great day. Goodbye.